Both on both top and bottom. Okay, we have big moves in the commodities pits as oil fell to its lowest level in more than 3 weeks. Gold dropping for the 5th time in 6 days. Here to break down the action
is Larry Shover, SFG Alternatives Chief Investment Officer. And yes, that's a familiar face on the right. Sandy Smith joining us from the CME as well. Sandy, oil's lowest close since August 22nd. I'm beginning to wonder whether this is more than just relief over not going to war in Syria, whether this has to do with Fed action as well. What do you think?
Yeah, I mean, it's really the tale of two markets right now. You had the U.S. dollar down today against a basket of currencies, which would indicate that the market is pricing in either exactly what's expected, a tapering of $10 billion by the Fed, or no tapering at all. And when you look at the price of oil, it's telling us a different story. That would indicate, aside from the Syria story, that would indicate actually that we're going to see the Fed taper more than expected, that we'd see a stronger dollar and weaker commodities. So the market might be setting itself up for a big surprise tomorrow.
Larry, I know that you guys have been watching this very closely, and tomorrow will be a big day. What is the chatter in the pits about how the reaction will take hold? We pretty much figure we'll see some type of tapering, but what are you expecting for the reaction? Where will we see the biggest spasms or gyrations? Will it be stocks, bonds?
I think it's going to be the stock market right behind me. I mean, we had a relief rally today. People kind of like getting used to the fact that, hey, we're going to see $10 to $15 billion of tapering, but it's much larger than that. It's the press conference. It's what's going to happen with guidance in 2016, specifically the Fed funds rate. Are they going to withhold ZIRP pledge, the zero interest rate policy? Is it going to be 2.5 or less? I mean, that's what's on the minds of traders. Anything that comes out of Bernanke's mouth will be sliced and diced, and I think we'll see a big move behind me one way or the other.
What's moving in the futures behind you right now, Larry?
Well, right now, people are just squaring up. People just don't want to have much exposure. And we're seeing that really across all sectors, whether it be ags, metals, energies, or behind me, right? People want to stay as flat as possible.
Okay, so then you understand exactly what happens with ags and commodities. Are you hearing any discussion about that?
Well, you know, you've got the stock market that's obviously been rallying into this announcement. Today was no different. So we got another 35-point gain in the Dow. But then you've got gold prices. You know, we were watching gold down about $8 today. It's hovering around a crucial level of $1,300 an ounce. Gold's right at that $100 level. So you've got all of these commodities, Liz, that are sitting at these key big round numbers, psychological numbers, where a lot of different trading programs are going to be set to be triggered on this announcement. That's why I think a lot of people like Larry you're hearing from are calling for a big move one way or the other, and not just the stock market, but the commodities markets as well. And this is all going to be about the U.S. dollar and currency movement, Liz. You know that all these commodities are priced in U.S. dollars. So if we get a big reaction in the currency market that trades at the CME, you're also going to get a big move across those commodities as well.
Larry, it certainly doesn't seem to be any concern about inflation when you look at commodities, but is there concern? I know a lot of the CME traders there are worried that all this money printing is eventually going to cause some kind of inflation or some kind of bubble, but you don't see it in the price of commodities.
No, you don't see it in the price of commodities. You don't see it in the price of the long-term euro dollars or the Fed funds rate or whatever you want to look at. It seems like the market is not pricing in inflation whatsoever. But keep in mind, traders behind me, like me, we all realize that we're in a policy experiment that we've never seen before, and nobody knows how this is going to turn out, whether it be inflation, deflation, or something in between, like inverse stagflation. Who knows? But right now, when you look at the forward curves and the interest rate products specifically, they're not pricing in inflation right now.
Inverse stagflation. That's a new phrase to me. Go ahead, Sandy.
Yeah. Dave, I was just going to point out, you know, everybody should take note of where the yield on the 10-year is right now. It's at 2.85%. Remember, just a couple weeks ago, we were above 3%. So that's likely going to be the thing to watch tomorrow.
Oh, but I think Sandra's right, but not necessarily for a commodities purpose. Watch the U.S. dollar. Any kind of lessening of Fed involvement is dollar positive. It's bullish for the dollar. So got to watch that tomorrow, too. And we will for all of our viewers. Larry Shover, Sandra Smith, great to have you both.
Thanks, folks.